So are we done with the photographs? Hello. Okay, so we can start.
Hello and good afternoon. Welcome to this post-policy press conference. Today we have with us Governor Shri Shaktikant Das, Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan, and also some other colleagues from Reserve Bank. Sir, as is customary, I would request you to make your opening remarks, and thereafter we'll move to the question answer.
Good morning and namaskar to all of you once again. I have 7 points which are primarily drawn from the statement which I have already made, and they are very brief. 1, domestic economic growth is resilient. Number 2, inflation has moderated from its earlier high levels, but the pace of disinflation is uneven and slow. Number 3, but still there is a distance to cover to reach or to align inflation to the 4% target. Four, the financial sector is stable with well-capitalized and unclogged balance sheet. 5, India has enhanced its resilience against spillovers from external shocks. 6, foreign exchange reserves have reached a historical high of $675 billion. 7, Reserve Bank remains committed to ensure orderly evolution of financial markets, which are orderly evolution of financial markets in its regulatory domain. I read this point again. Reserve Bank remains committed to ensure orderly evolution of financial markets in its regulatory domain. Thank you.
Thank you, sir. Before we start, I will request the media friends present here to please wait for your turn. Also, please restrict to 1 question per person so everybody gets an equal chance. If time permits, we can consider other. Sir, there are 24 participants from media today, and with your permission, I'll call out their names. So we'll start with Ms. Lata Venkatesh from CNBC.
Before that, I just want to make 1 point. The second point actually, I just want to rephrase it, what I had said. It should read as follows, that inflation is moderating, but the pace of disinflation is uneven and slow. I said that it has moderated from its high levels, but I have actually, the wording should be, inflation is moderating, but the pace of disinflation is uneven and slow. And third point was that there is still a distance to cover to align CPI inflation to the target. Thank you. Yeah, please go ahead.
Good morning, Governor and Deputy, everyone in RBI. I'm Lata Venkatesh from CNBC TV 18. Governor, can you parse the impact of the global, especially the US economic data on the Indian economy? The last 1 week expectations are that what was, the Fed's rate cut would be 1 in September for 2024. Now the market is factoring in 125 basis points. While we completely understand that, you will set policy as per domestic economy, regardless if the, economy abroad is so weak, it will tell global growth. So if you can give an idea whether you see any downward bias to our growth and inflation if things were indeed to turn out to be that the Fed has to do 5 cuts, if there is that kind of a slowdown. As well, a request, why don't you give us now nominal forecasts also? Because that is becoming as important.
No, that's a separate issue. Now, I would guess that there will be a few other questions also on this topic because it is so fresh in everybody's mind. So we were expecting actually quite a few questions on this issue. So is there anyone else who wants to ask a question on this particular area or a related area so that we can take it all together? No, I think same questions. Okay, now you see there were some developments in you were referring to the United States economy. Now, actually, if you see, I would like to say two things. Number one is that the unemployment data which came from the United States just last week, that has created some, that has led to this kind of speculations. But if you look at overall economic growth in the US, I think it's doing quite well. The second quarter growth numbers in the United States were higher than the first quarter, and it was about 2.8. It was 2.8%. And then second point is that this is a kind of a, this is just, so far as unemployment is concerned, it's a 1 month's data. Now, based on a 1 month data, you cannot assume that, you cannot rush to a conclusion about possibility of slowdown or possibility of a recession in in a large and the largest economy in the world. So you have to wait and see the incoming data. In any case, I think some narrative coming out from several members of the Fed, they have also said the same thing, that we need to watch. So therefore, I think it would be sort of, I would say at this point of time, it would be premature to talk about a recession in the United States, but I'm not holding a brief for the US. And all that I would like to say from the perspective, from the point of view of the Reserve Bank, is that we will be watchful of all incoming data from domestic as well as, in this case, from external sources, and we will deal with all emerging situations. Further, let me also add, and it is there in my statement as well as in the points which I read out just now, today India has improved its resilience vis-a-vis external shocks quite a bit. I think India is far more resilient than what it was earlier. So we will have to wait for the incoming data and deal with the situation. International agencies like, all international agencies like the IMF, the OECD, the WTO, they have all projected world trade to rise this year, to grow this year at about 3% or so against very low growths last year. So this projection was just made very recently, and that would obviously support the overall external demand situation. So I'll stop here.
Thank you, sir. May I request Ms. Sangeeta Mehta from Economic Times, if you would like to.
Thank you, sir. Sir, in your policy, you had mentioned that you'll be watchful of the inflation, and then you also said that you'll take measures depending on if it is transitory or persistent. So what are the measures that you would take to conclude? I mean, what are the measures that you will use to conclude that the inflation is transitory and it is not persistent? What are the tools or the measures that RBI has in mind?
First of all, we look at the sources of shocks. There are various types of items in the food category. They come with, say, a 7-day recall, which is the most perishable, and a 30-day recall, which is a little longer. So usually the most perishables have a very short shock that lasts not more than 2 months. Also, we can calculate what is called persistence, which means how much time does it take for a certain price to return to its mean value after a shock. So we watch all these things when we judge whether it's persistent or transitory.
Thank you, sir. Next, we'll have Mr. Mayur Shetty from the Times of India.
Yeah, there was a study which said the neutral rate has moved up. And also you recently increased the liquidity requirement for banks through the LCR. So my question was whether there is a new normal when it comes to interest rates and liquidity, which is higher than earlier. And also a follow-up on that is that you asked banks to mobilize more household deposits. So is that an indication that deposit rates should go up?
You see, with regard to LCR, liquidity coverage, which the banks are expected to maintain, it's a draft which we have put out in the public domain. We will get inputs from all stakeholders, including the banks and other experts. Based on that, we will finalize our decision. We will take a decision. So far, it will not be correct to say that we have increased the liquidity requirements because it is still under discussion. We are waiting for the inputs which will come. Now, so far as deposit rates are concerned, it is for individual banks to decide on these matters which are entirely a part of their commercial decision making. Lending rates and deposit rates, as you know, are deregulated. It is for banks, and the situation will vary from bank to bank. So depending on the overall economic situation, financial conditions prevailing, depending on individual banks' own internal position with regard to how much deposit they have, what is the composition of their deposit, what is their loan growth. It is really for the banks to decide on the deposit rates, and the banks will have to take a call. All that we have done is to say that the banks should use their branch network, come out with innovative product offerings in both goods and services. Not goods, both in innovative product offerings with regard to deposit, with regard to mobilizing deposits. So therefore, it's for the banks to decide. With regard to the neutral rate, I would request the Deputy Governor Michael Patra to take that question.
Yes, so as we promised, we brought out updated estimates of the neutral rate, and as we suspected, the neutral rate is actually reflecting the better performance of the economy. A major driver of the neutral rate is potential growth, and that has started to rise. So if you factor in the neutral rate, then you will see that the current level of the policy rate is probably exactly right. And about the liquidity question you asked, liquidity is the operating procedure. It just reflects the policy stance. It's not independent in itself.
Thank you, sirs. Next, we'll have Ms. Swati Bhatt from Thomson Reuters.
Thank you. Governor, I had two very related questions with regards to the foreign money that has been coming in. One is we saw the government, sort of go back on the FAR securities. Also, RBI put out the release, which market participants said is kind of a U-turn that you've taken on allowing the 14 and 30-year bonds as part of FAR. Now, today we've seen that the 10-year benchmark bond has reached 9.6% ownership, foreign ownership. Is this going to become a matter of concern with so much ownership in benchmark securities? Because that is the longest tenor bond that is now available for foreign investors to invest in freely. And is there a likelihood of a rethink on FAR securities beyond what has already been announced? And secondly, even on the OIS front, foreigners have a 3.5 billion rupees limit on how much positions they can take in the onshore market, which is almost nearing exhaustion. Is there going to be a rethink on that? Because otherwise we could likely push this market to the offshore offshore OIS markets, NDOIS. Thank you.
I would request everyone to just ask one question, please, so that everybody gets a chance. I think you take the question.
Yeah. So Swati, if you look at the total outstanding, of the total outstanding 10-year paper, the total foreign holding, FPI, under various routes is only 4.8% outstanding. Now, if you look at the MTF, the medium-term framework, it has certain limits on security-wise holdings, FPI-wise holdings, and concentration limits. So they are natural barriers to any volatility there, right? On the question of the exclusion of securities from the FAR, we have observed that the major part of the interest of FAR investors is in the 5 to 10 year. Actually, it accounts for 90% of the total investment. And the interest in the 30-year is just 2% of the total stock of 30-year that has been issued. So that's one thing. Also, it's like giving time to people to adjust their portfolios, because we know that the weight of India in the bond index will slowly rise over a 10-month period. So they have time to adjust their portfolios. Now, all the existing securities issued are available for investment. So that makes 41 lakh crore of available investment, of which investment today is only 2 lakh crore. Okay, so there's an ample amount of space to go. Our assessment is that in the categories that are now allowed, there are going to be 4 lakh crores of new issuances, which are open to FAR. Okay, apart from that, there is the MTF, on which while the limit is 6%, it's only 2% today. So it's not as terrible as it is made out to be. And what will happen is that our hope is that concentrating them into this 5 to 10 year segment will actually make it more liquid, and better price discovery will occur, and transaction costs will fall as depth increases. What was the question on?
So the 3.5 billion limit is almost near exhaustion. It was set in 2019 and there has been no review of that. So a lot of these FPIs will now have to move offshore if they have to hedge their interest rate bets. So is there going to be any increase in that 3.5 billion limit?
No, we are reviewing it constantly. Also remember that we are not open on the capital account fully. So this is part of that. We will review it as the limit is neared.
Thank you, sir. Next, we'll have Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, in the morning you spoke about the food inflation and why it is important. But the government in its economic survey is saying that food inflation should be left out from the target. And also they are arguing with some merit that monetary policy cannot control food inflation. The consumption expenditure survey also said that the weight of food is also probably reducing in the CPI. So would you like to have a change in the CPI, and is that the right target for you to aim for?
You see, the consumption expenditure survey is undertaken by the NSO. The current CPI basket, and what is the weight of core, what is the weight of fuel, what is the weight of food, has been decided on the basis of 2011-12 data. It's, years have passed by. There should have been one more review, but because of COVID, I would guess because of COVID and the pandemic related stress, it could not be undertaken. 1 year data collection has been done by the NSO as far as I am aware. I think the next year data collection is on, it's on, and the analysis is on. So based on that, the NSO will decide. This is something which is periodically done. What we are looking at it is that what NSO does, and which is indeed the basis of the consumption basket, our conclusion, or we draw from what the NSO gives us. The country draws from that. What is the total expenditure basket in that? How much is the food component? How much is the core component? How much is the fuel component? So therefore, they haven't come out with any definitive conclusion so far as the weights of all these components of CPI headline inflation is concerned. And with regard to the importance of food inflation, a question comes up, in the mind of any average, any business or other people, that what is the role of monetary policy in the context of food inflation? It is made out as if monetary policy doesn't have a role. So it is basically whatever I wanted to say, I have said it in my statement. I would not like to add, I have nothing more to add to what I have said in my statement.
Thank you, sir. I'll request Mr. Anand Adhikari from Business Today.
Good afternoon, sir. Sir, there is a narrative, suggesting that the F&O trading is impacting the household savings. And I was looking at some RBI data, on the fund flow into financial assets and liabilities. this is for FY23. The share of equity trading is minuscule there. Even mutual fund is very high, FD and PF and the insurance part has a much higher share. Second, the financial liabilities have gone up, but that have gone up because of the housing or the home loan, not because of personal loan. So is it justified to link the fall in household saving to F&O trading?
No, we are not linking,
I'm saying there's a narrative in the market which is linked. Not
right. Some narrative is there in the market. So I think, would you like to take this question or would you like to deal with it? I'll supplement. Huh? Yeah, you can take it. I'll supplement.
So I would request that you look at household savings from a perspective which is a little different from here. As you rightly said, there doesn't seem to be much of exposure to equities in the household saving, in the composition of household saving. So what is actually happening is that there is a churn going on of the precautionary savings that were made during COVID. It rose to financial savings was very high, where there are no avenues to spend. That is being drawn down to more normal levels. So one aspect of household saving is that. The other aspect is that there is a shift going on from financial saving to physical saving. People are buying more houses, etc. So physical saving is actually going up. If you take both of them together, then the total household savings has stabilized at around 20%. It was falling for quite a while, now it has stabilized. So all in all, I'm seeing return of normalcy in household saving behavior with these shifts.
Thank you, sir. Next, I'll request Mr. Ankur Mishra from ET now to ask his question.
So continuing with the same question, you had mentioned earlier also that regarding specifically on F&O, the increased volume is something which you are watching from financial stability point of view. Now in today's policy statement also you have mentioned about the money moving towards the alternate investment avenues. SEBI has recently come out with consultation paper on F&O, whereby it aims to restrict the entry-level kind of a retail participation who were losing money, and as per the SEBI data, it is around 90%. So I want to ask, with the steps like these, will it help to the cause of the banks, which you are saying that the deposits needs to be garnered, there needs to be innovative ways, but will these steps help bank in garnering deposits?
You see, F&O, it's not as if, in F&O people are looking only at the margins. It's not as if the, entire savings amount is going into F&O. So that is something we have to remember. And on F&O, whatever views we had, we have already discussed with the SEBI the early warning group that we have among all the regulators. There is something called the early warning group. It has been discussed. We have put forth our viewpoints there. SEBI has taken note of our viewpoints. SEBI has made its own analysis, and any further steps based on the discussion paper and the inputs they get, SEBI will take appropriate action. So, and with regard to the bank deposits, and I think DG has already explained, you see what the thrust of all that I am saying is that the mismatch or the divergence between bank deposits and bank credit growth, the divergence may create, let me put it this way, may create asset liability or liquidity issues, liquidity management issues. So I am only flagging this issue that because of this divergence in growth of deposits vis-a-vis growth of credit, it can potentially result in a liquidity management issue which the banks have to deal with. I am not by any chance suggesting that people should more deposits in the banks, not go for equity market. It is left to the people to decide. It's left for the investor, it is left for the saver to decide where he wants to put the money. All that I am saying is that the banks need to focus on this, mindful of this, because potentially it can create some structural challenges with regard to liquidity management. And one way of dealing with this situation is that the banks have the potential, the huge network of their branches which they need to capitalize and raise their deposit levels if they have to if they are proposing to also sustain and support their credit growth. So it is more in the context of a structural challenge that may come up with regard to liquidity management.
थैंक यू सर। अब मैं श्री अनुराग शाह ईटी नाउ स्वदेश से आग्रह करूंगा कि वो अपना प्रश्न पूछें।
धन्यवाद सर सवाल पूछने का मौका देने के लिए। सर, जिस तरह से आपने डिपॉजिट को लेके कहा कि बैंकों को अपना नेटवर्क का इस्तेमाल करना चाहिए, इनोवेटिव प्रोडक्ट करने चाहिए, तो उसमें हमने देखा है कि कुछ बैंक है, मुंबई का एक उदाहरण लूँगा, एक बैंक ने पूरे मुंबई के अंदर बैनर पोस्टर लगाए हैं कि राज्य सरकार की एक स्कीम है, उसके अंतर्गत जीरो बैलेंस आप अकाउंट खुलाइए, हम बड़ी संख्या में अकाउंट खुल रहे हैं। तो यही सर जो अकाउंट होते हैं जो गरीब तबके के लोग खुला देते हैं और बाद में चल के म्यूल अकाउंट या फिर जो साइबर फ्रॉड्स के अंदर इस्तेमाल होते हैं। और ये भी अब देखने को आ रहा है कि साइबर फ्रॉड्स में सर एक अकाउंट से दूसरे अकाउंट, तीसरे अकाउंट की सबकी केवाईसी है, लेकिन फिर भी जिस वो विक्टिम होता है उसको रिकवरी नहीं हो पाती है क्योंकि आइडेंटिटी स्टेब्लिश नहीं होती है। तो सर जब इनोवेटिव प्रोडक्ट्स की तरफ जाएंगे, आउट ऑफ द वे जाएंगे, तो उस पर भी आरबीआई अपनी नज़र बना रहा है।
इसी मैं किसी को आउट ऑफ द वे जाने के लिए नहीं बोल रहा हूँ। बैंकिंग सिस्टम का एक रेगुलेटरी पैरामीटर्स है, रेगुलेटरी पैरामीटर्स के अंदर जो पॉसिबल है बैंक सिर्फ वही करेंगे। आउट ऑफ द वे किसी को जाने के लिए हम इशारा नहीं दे रहे हैं और बैंक्स भी ऐसे नहीं कर रहे हैं, नहीं करेंगे। और जहाँ तक डिपॉजिट मोबिलाइजेशन है, इंडिविजुअल जो केस आप कह रहे हैं उसके बारे में मैं कुछ कहना नहीं चाहता हूँ, क्योंकि आपको पता है इंडिविजुअल केसेस के बारे में हम कमेंट नहीं करते हैं। बैंकों का जो गवर्नेंस स्टैंडर्ड है, रिस्क मैनेजमेंट स्टैंडर्ड है, उसमें काफ़ी इम्प्रूवमेंट हुआ है पिछले कई सालों में। तो जो नए प्रोडक्ट्स हो या जो नए ड्राइव हो बैंक लॉन्च करेंगे, हमारा ये विश्वास है कि बैंक खुद उसमें क्या क्या रिस्क हो सकता है उसके मद्देनज़र वो अपने फैसला लेंगे।
धन्यवाद सर। अब मैं जी बिजनेस के श्री ब्रिजेश कुमार जी को आमंत्रित करूंगा।
सर, आपने स्टेटमेंट में अपने कहा कि जो टॉप अप लोन्स हैं एक तरह से बैंकों को उन पर ज़्यादा वॉचफुल होना चाहिए क्योंकि एंड यूज़ का पता नहीं है। तो क्या आपका इशारा इस तरफ है कि शायद वो स्पेकुलेटिव एक्टिविटी में जा रहे हैं या अनप्रोडक्टिव सेक्टर में जा रहे हैं? और इसी में ये मैं समझना चाहूँगा कि ये एक तरह से आपकी तरफ से इंडिकेशन है या कोई रेगुलेटरी या गाइडलाइन टाइप की भी चीज़ें आप लाएंगे इस पर? और अगर वक्त है तो एक सवाल और सर, एक सर्विस चार्जेस का रिव्यू आपने 2015 में मास्टर सर्कुलर आया था, उसके बाद से उसको रिव्यू करने का कोई
कौन सा सर्कुलर?
सर्विस चार्जेस।
नहीं, मैं एक क्वेश्चन लूँगा। वो फर्स्ट क्वेश्चन जो था, आपका समय नहीं है, बाकी लोगों का भी मैं बायलैटरली आपको अलग से बता दूंगा। और फर्स्ट क्वेश्चन था अबाउट टॉप अप लोन। मैंने स्टेटमेंट में ये कहा कि कुछ बैंकिंग एंटिटीज़ में ये नज़र में आया है। इनफैक्ट आप अगर हमारा स्टेटमेंट जो अपलोडेड है वेबसाइट में, मेरा जो स्टेटमेंट है उसका वर्जन तो अपलोड हो गया है अभी वेबसाइट, आप आरबीआई वेबसाइट में देखिए, उसको मैंने दोहराया। वो सेंटेंस मैंने कहा कि इन सर्टेन एंटिटीज़, कुछ एंटिटीज़ में ये हम देख रहे हैं कि जो रेगुलेटरी रिक्वायरमेंट है टॉप अप लोन्स के बारे में उसको वो फॉलो नहीं कर रहे हैं कुछ एंटिटीज़ में। और मैंने दोहराया बाय सेइंग दैट आई रिपीट इन ए फ्यू एंटिटीज़, मतलब उसको मैंने दोहराया। तो ये सिस्टम लेवल का प्रॉब्लम नहीं है, कुछ एंटिटीज़ में ये प्रॉब्लम्स आया है, उसको हम सुपरवाइजरी लेवल में बायलैटरली उन एंटिटीज़ के साथ डील कर रहे हैं, बट ये कोई सिस्टमिक प्रॉब्लम नहीं है। तो क्योंकि हमने कुछ एंटिटी में इस टाइप का एक ट्रेंड देखा, इसीलिए हमने सबको एक मैसेज दे दिया कि आप भी इस तरफ ध्यान दीजिए, क्योंकि बैंक का लोन्स तो कई ब्रांचेस, मतलब इतने सारे कंट्री वाइड ब्रांचेस रहते हैं। तो इसीलिए ये एक इशारा है, ये एक एडवाइस है बैंकों को कि आप इसको प्रोएक्टिवली मॉनिटरिंग करिए, मतलब उसका क्या एंड यूज़ क्या हो रहा है, एंड यूज़ मॉनिटरिंग करिए। और उसमें आपका जो प्रूडेंशियल नॉर्म्स जो रिक्वायर रेगुलेशंस है उसको आपके डाउन द लाइन लोग फॉलो कर रहे हैं या नहीं, ये एक उनको एक मतलब क्या कहते हैं, एक एडवाइजरी नेचर के तहत हमने बताया। और जहाँ जहाँ ये हमने नोटिस किया, जो कि कुछ एंटिटीज़ में है, वहाँ हम अलग से डील कर रहे हैं।
धन्यवाद सर। नेक्स्ट आई रिक्वेस्ट मिस्टर मनोजीत साहा फ्रॉम बिजनेस स्टैंडर्ड।
गुड आफ्टरनून सर।
In your statement, you have said that the disinflation process is uneven due to large and persistent supply shocks, mainly due to food items. Are you happy with the way the government agencies are monitoring the supply side management? Do you expect them to improve their supply side management so that so that inflation, the disinflation process becomes more smooth towards the target?
You see, on the aspect of supply side measures, there is constant engagement between the RBI and the relevant ministries of Government of India. And government has been taking number of measures. In fact, one or two, I think last year in the annual report, we have given out the list of measures which have been taken by the government to deal with the supply side issues in inflation, including food inflation. There's a long list which is given out in our RBI's annual report. And the various ministries are attending to the situation as it is emerging. Surprises are there, sudden rainfall and floods, etc. Even that is being discussed between the RBI and the government, and government has been taking steps.
So you are okay with the supply side management, that way the government?
No, you are asking me to give a rating of government action, which I will not. Because it's a continuing process of interaction between government. Government has taken number of measures, and that's how it goes.
Can I add one more on LCR?
Please. I think somebody else can pick up your question, because otherwise LCR we have not yet introduced, not yet implemented. It's still in discussion. It's still in draft stage. So when the comments come, we will examine.
No, the question is why this additional 5%? Is there any sign or signal which you have found that that Silicon Valley kind of issues could happen? Was there a concern because additional 5%?
No, I think you have said that. Please, I think I was unfair to him that way by not allowing the second question. I would request once again, urge everyone, second questions you can clarify bilaterally after the press conference. But since you have said it on, in front of camera, I would request Deputy Governor Rajeshwar Rao to deal with that question briefly.
Thank you, Governor. I think Governor has rightly indicated it is a draft circular at this stage. And the LCR guidelines were issued in 2014. So that it was a time for a review which was warranted at that point, and taking into account the current developments in technology, digitalization, etc. So all those have been factored in, and the draft guidelines have been put in public domain. So we will wait for the public comments and then take a final call on what needs to be done.
Thank you.
Thank you, sir. Sir, with your kind permission, few more questions. Next, we'll have Mr. Ashish Agashe from PTI.
Thank you so much, sir. Sir, you spoke about the global outage and how we dealt with it. Also, sir, recently, due to over-reliance on a single entity, we saw quite a lot of smaller domestic lenders, customers finding it difficult to transact, doing simple payment-linked sort of transactions. What really happened, sir? How can we avoid this? How are you looking at this?
I think Deputy Governor Swaminathan can take that question.
That's right. It was an impact was felt from an IT service provider, because there was one of the third-party service provider systems were impacted. And incidentally, the entity was also providing the similar third-party services to many other smaller banks and RRBs. Since there was a likelihood of the risk transmitting to the other systems, as a proactive measure, they had to be shut off from the payment system. That was done as a proactive measure by NPCI, and it lasted for about 3-4 days. Apart from their own internal root cause analysis, there was an external party study was also conducted. Certain remediation measures have been recommended. They are being implemented. These are kind of instances why we repeatedly insist on proper disaster recovery and business continuity plans, which has been reiterated even in this speech as well, that all service providers have got to have their DRBCP things robust, and also the banks have to have alternate avenues through which they can function. So these are kind of things that keep evolving, but we watch and then provide advisory. The Seaside has already issued its advisory as this event played out as to how banks can augment their systems and have their business continuity plans in place. We will keep assisting the entities in terms of ensuring that the customer inconvenience is minimized.
You see, I would just like to small supplement. You see, the NPCI action to block further transactions wherever this particular service provider had been engaged was to isolate the problem. And if it had not been done, it could have, I'm not saying it would have, it could have produced a system-wide impact, which could have been far more costly. So therefore, that problem had to be isolated and dealt with. And as Deputy Governor is saying, that the seaside team of RBI has already gone into the details of it, and appropriate action has been taken.
Thank you, sirs. Next, we can have Mr. Laltendu Mishra from The Hindu.
Good afternoon, Governor. Taking Anup's question ahead, what is your view about the suggestion that by the economic survey that the food price inflation should be de-linked from the framework?
No, I don't have any personal view. These are all institutional views. And as I said, the NSO survey is on. And based on that, if required, depending on the what the data throws up, depending on that, a decision will be taken at the appropriate time between the government and the Reserve Bank. But it all depends on, what data and what picture the NSO survey throws up.
Thank you, sir. We'll have Ms. Hamsini Karthak from Money Control.
Hi, good afternoon. My questions pertaining to unsecured loans. The expectation is that in FY26, there might be a little more tightening of the regulatory framework as far as project loans related issues concerned, and on LCR as well. In this background, would you consider relooking risk weights on unsecured loans and lending to NBFCs, primarily because the circular which was intended to sort of curb these loans issued in November last year is beginning to somewhere do its job. So would you want to wait it out for another 1 year or so, see how much of it is percolating in the system and review it? Any guidance you can provide on that, sir?
I think you can take that question.
Yes. See, the November 23 measures are having its intended impact. We are watching the incoming data. But it is too premature to say at this point in time. It's only 2-3 quarter data that has come in so far. So we will watch out and then see how it progresses, number one. Number two, the growth has moderated but still keeping good pace. From about 30% year-on-year growth in some of these segments that we saw when we implemented this, currently it's running at 15-16% year-on-year, which I think is keeping in trend with overall credit growth. So I don't think that a moderation or a revision of this is necessary at this point in time, but we will keep watching the incoming data. Coming to the second issue, in terms of rest of the items being tightened, I think they're all at the draft guideline stage at this point in time. And once the feedback is all collated, risk weights can be examined at that point in time and not now. Third, of course, is that on personal segment, what you would appreciate is that we only brought back what was the pre-COVID level. We are not actually enhanced. In COVID times, the risk weight on personal segment, certain categories were reduced to help a difficult situation. So what we did in November 23 was only to bring it back to the old level. So it's not something which got enhanced, which will require a revision at this point in time. But we take your suggestion, but we will keep watching the incoming data and take steps as may be necessary.
Thank you, sir.
Thank you, sir. Next, we'll have Mr. Shyan Ghosh from the Mint. Yes.
Governor, you recently spoke about mule accounts in the system. Could you give us some insights on where these are originating from, what kind of accounts these are, and if you also could give some numbers on how many have been found in the system in terms of these mule accounts, some more data on that. If you could.
No, we don't have any ready data available for this. The number. Do you have any this thing?
No, we don't keep that in terms of numbers. Essentially, what we do is that reiterating on advisory in terms of the KYC process, customer onboarding process, the transaction monitoring process, proactive risk management measure. These are kind of things that we'll keep insisting with the regulated entities so that the possibility of such accounts existing or being made use of by the fraudsters is minimized. That's what we will do. The number of entries, etc., and then disabling them is part of a continuous process. We work closely with the law enforcement agencies and the ministry and the participating banks to ensure that these risks emanating from this are minimized from time to time.
You see, banks have their transaction monitoring system. There are very odd, idiosyncratic transactions. For example, a low value, a bank account where the transactions have been of very low value. Suddenly, if the transaction frequency or the amounts being transacted, it goes up. In many such instances, the transactions are held at in late night hours. So the banks have systems now to monitor that, and that is something we have sensitized the banks. Most of the banks have systems in place to monitor such the behavior of this kind of accounts, to such behavior in the banking system, and wherever required, action is being taken. And as he said, there's a constant dialogue between there's a constant engagement between the RBI, the law enforcement agencies, the concerned ministries of government, and of course, the banks.
Thank you, sirs. Next, we'll have Mr. Vishwanath Nair from NDTV Profit.
Governor, 2 times now in public speeches you've talked about the retail deposit growth at banks and warning them that there could be structural issues in case this problem becomes bigger than it is right now. Either they're unable to or not willing to really take that extra step to attract more retail deposits. But is there anything beyond advisories and warnings that the RBI can do in this situation? Can you at any point in time push banks to actually start thinking about how to attract that deposits? Specific instruction, I'm saying.
No, this is again, this is for the banks to take their own decision. I mean, we trust the judgment and the risk management systems in the banks. As I said, that the risk management systems in banks have become much more robust today. So we don't want to do micromanagement for the banks. But yes, at the supervisors level, there are constant, discussions between our supervisors do interact with the banks at regular intervals. At my level, I have meetings with the CEOs of both public and private sector banks. Such issues come up for discussion. In fact, in the last meeting, which we had about a month or so ago, this was one of the listed subjects. We have discussed, shared our thoughts, and it's for the banks to really take the required measures. We watch all incoming data. I'm not saying with reference to the liquidity management. We watch all incoming data from the banking sector. Wherever required, the RBI, wherever required, I'm not saying we are going to take some action tomorrow. As and when required, and when required, the RBI may take action. And please note that I am not saying that you should not conclude that RBI is going to issue a circular on the liquidity management. But all bank incoming data with regard to banking sector are monitored, and we sort of deal with such problems should they arise.
Thank you, sir. Last few questions, sir, or maybe last two questions, sir. Yeah. So we'll have Ms. Shama Mishra from Doordarshan.
Thank you, sir. So what impact do you see of the flood situations in various states on inflation? Can the situation be worrisome going further?
No, we are monitoring that. It was sort of confined to 2-3 places. Kerala also, it was one particular district. Himachal also, certain regions of Himachal. And obviously the impact on, what impact they'll have on prices of vegetables or supply disruptions, we are monitoring them. And, some of these things, the impact would be temporary. The impact would be temporary. And so it is constantly monitored what impact it will have on inflation on a wider scale. That has to be monitored, that we are monitoring. And that's it, I would like to say. But I would like to also mention, which is there in my statement, is that the monsoon now, I think according to the latest number which we have, it's about 106% above the long period average, isn't it? 7% now. 7% because it comes every 2 days or so. So 7% above the 7%, no? 7% above the long period average. And the Kharif sowing has picked up. So what it will achieve, and also there is a forecast of, lest you miss out, there's a forecast of La Nina playing out in the second part of the second half of the monsoon season. And the reservoir levels are also very, very good now. So what this will do is that it will have good impact on the Kharif output. So Kharif net sown area has also exceeded. So we expect this to have a positive impact on the Kharif output. And because of the improvement in the moisture content in the, in the soil, it will have a positive bearing on the Rabi output also. So these are things which we keep on monitoring, and we'll deal with it.
Thank you, sir. Lastly, I'll request Mr. Roysuke Hanada from Nikkei for his question.
Hi, good afternoon. I would like to ask about the government bond. At the end of the last month, RBI announced a new rule for foreign investors to purchase some government bonds. To be more specific, I mean to ask about the exclusion against the 40-year and 30-year government bond under the fully accessible route. And could you tell us the purpose and context of the decision, and what do you think of the potential impact of global investors' sentiment and the inflation preference for the Indian market?
I think that question was elaborately answered by the Deputy Governor Michael Patra. But so far as global investor sentiment is concerned, I think global investor sentiment vis-a-vis India continues to be very high. And I have given the data with regard to the FPI inflows, with regard to the FDI inflows. It is there in my statement. So I would, our assessment is that the global investors' confidence is very, is very, very positive so far as India is concerned, as reflected from the FPI, FDI flows. And also the fact that, so far as GDP growth is concerned, I think the GDP growth of India is expected to be one of the high, is expected to be the highest among the major economies. And even the international agencies like IMF have also revised their growth projection for India upwards from 6.8 to 7%. So I think overall international confidence on India remains intact.
Thank you, sir. With this, we come to the close of this press conference.
Can I please get me one last question, sir, please? I haven't had a chance to ask.
Right.
Sir, good afternoon. Dr. Patra just said that...
No, just introduce yourself so that everybody knows, yeah.
I'm Pratigya from Informist Media. Dr. Patra just said that liquidity conditions reflect the RBI's monetary policy stance. In the last couple of months, we've seen liquidity conditions swing so that overnight rates are down by 25 basis points. So how do we read the RBI's liquidity management in conjunction with the current stance, which has been unchanged all this while? And are the RBI's OMO sales also aimed at draining core liquidity?
So if you recall, some time ago, there was a peculiar liquidity situation where government balances were being built up and spending was not happening and liquidity had tightened. Now we see a much better balance in liquidity conditions. So we are doing, as in cricketing parlance they say, we are middling the rate, the call rate. It's in the center of the corridor. And that's where we like it to be ordinarily. All our actions are intended to continue maintaining that. As I mentioned, that the call rate is our operating target. It reflects the monetary policy stance, and the stance is one of continuing to withdraw accommodation.
Thank you, sir. So we'll close this press conference with your kind permission. Thank you all for making it interactive. I thank the top management of the Reserve Bank for answering all the questions. Thank you all and have a pleasant day.
Thank you. Thank you all. Thank you.